The South African economic growth has been weak for quite a while, and the current economic growth projections, albeit for an upward trend, they are still looking very constrained. This hasn't helped the equity market returns, which have been quite weak on the back of weak economic factors. When you take into account global factors like the US-China trade wars, the uncertainty around Brexit, and the general risk around emerging market, and you couple that with uncertainty, political uncertainty in the South African market around the upcoming elections, the low business confidence, and the potential for a downgrade by Moody's, the future looks quite gloomy for the equity markets. Because of the poor performance of the traditional assets, particularly the equity markets, investors are considering bolstering their returns by looking at your non-traditional assets, which are your alternatives. We have seen a demand from investors in this space. The global investors have been looking at this asset class for quite a while, and their allocations are ranging around the 20% of AUM mark. Unfortunately, our South African investors have historically had very low allocations to alternative assets, with their allocations ranging around 2% of their total AUM, according to the latest Alexander Forbes survey. The range of alternative assets that are available in the South African market for investors to invest in will range from your senior unsecured credit, including the mezzanine debt, and it will cover also private equity investments. There is also what we call real assets. The real assets would cover mainly your infrastructure assets, which have been bolstered by the rollout of the renewable energy program by Eskom and the government. It would also include your unlisted property. These opportunities are mainly available to your high net worth individuals and to your institutional investors because of the high minimum investment that are required. The way the investors can access these opportunities is through a fund format or through a segregated mandate. The segregated mandate is more relevant for an institutional investor.